Trump's new tariffs, announced on April 2nd, turned out to be worse than expected. A flat 10% tax will hit all countries exporting to the US, with some facing even higher levies. Tariffs on Chinese goods, for example, will now exceed 50%. And just to make my point, here is the Fear and Greed Index, showing extreme fear as investors are worried about future declines. But does that mean it's the end for Bitcoin? Let's dive into the market, because the future might not be as bleak as it seems. Markets are down, but no panic. Hey crypto sensors, great to have you here for today's updates. Hope you're having a good Friday, because the markets sure aren't. It's been another rough day for crypto. Trump's new tariffs, announced on April 2nd, turned out to be worse than expected. A flat 10% tax will hit all countries exporting to the US, with some facing even higher levies. These go into effect on April 5th. For exporting countries, things look even tougher. Tariffs on Chinese goods, for example, will now exceed 50%. That means higher prices, not just for American consumers, but globally, fueling fears of rising inflation and a potential recession. Nobody gets out of this untouched. Some experts, including JP Morgan, put the odds of a recession at 60%, calling these tariffs the biggest tax hike on US households and business since 1968. As the world braces for an escalating trade war and markets scramble to figure out what's next, we are going to hear the word recession a lot in the coming days. And just to make my point, here is the Fear and Greed Index, showing extreme fear as investors are worried about future declines. Which means we should expect bearish markets. But does that mean it's the end for Bitcoin? Let's dive into the market, because the future might not be as bleak as it seems. Let's start by taking a look at the markets. I'm not going to break down every single chart in detail, but the main idea is clear. All the indexes are taking a hit. The Dow plunged 1,353 points, or 3.21% in morning trading. S&P 500 companies lost a combined 2.4 trillion USD in stock market value in Thursday's sell-off on Wall Street, their biggest one-day loss in value since the coronavirus pandemic. And the tech-heavy Nasdaq plunged 4.92%, heading for its worst day since March 2020. And it's now just 2% away from slipping into a bear market. Global markets took a hit on Thursday, especially in Asia, where export-driven economies felt the impact. And now looking at Europe, benchmark indexes like the Stoxx 600, Germany's DAX, and France's CAC 40 are all deep in the red. Investors are rattled by the new 20% tariffs on imports from the European Union, EU. But European leaders aren't staying silent. They have warned Donald Trump that these tariffs will be met with a strong response from the EU. For instance, French President Emmanuel Macron on Thursday urged European companies to suspend planned investments in the United States, industry by industry, until things are clarified. This comes just weeks after French shipping giant CGM announced a massive $20 billion investment in US shipping logistics, and now possibly in jeopardy. To put this into perspective, the EU and the US are each other's most important trade and investment partners. France alone invests 370 billion USD annually into the US economy, and the EU is the largest source of foreign direct investment, or FDI, in the US, totaling $3.46 trillion. Stakes are very high. Trade war is brewing, and we should expect a gradual freeze on global investments until things are clarified. And the crypto market in all of this? All coins fell. Not just Bitcoin, but also the altcoins. Now let us go for a total 3. It's a metric that shows the total market capitalization of the cryptocurrencies excluding Bitcoin and ETH. It's very good for analyzing the performance and trends of the altcoin markets. So what do we have here? Current market value is slightly down, minus 0.35%, indicating bearish sentiments. But on a general decline since February, with lower high and lower lows forming consistently. The market cap appears to be testing a key support level around 750 billion USD. If this level breaks, the next significant support could be around 730 billion, as seen in previous dips. So, for us, it means we must watch for a break at this level, which seems likely, at least in the immediate aftermath of Thursday's tariff announcements. We are seeing some resistance around the 820 billion mark. This is where previous rallies have been shut down. If the price can finally break above that level, it could be a strong signal that the trend is starting to turn around, so we should watch for a recovery there. So, what could this mean for altcoin? Well, there are a few ways to look at it. Right now, we are keeping an eye on two key levels. That 750 billion support. If that breaks, we could see further downside. And on the flip side, a recovery about $820 billion might hint at a trend reversal. The ongoing downtrend is telling us that investor confidence in altcoins is still pretty weak. That could be tied to broader macro factors like trade tensions or even Bitcoin gaining more dominance in the market. Speaking of which, this heat map you're seeing was captured just before midnight yesterday. Since then, Bitcoin has bounced back to around 83k, but interestingly, its market dominance is still holding steady at 60%, and that's something to watch closely. Now, let us look at the value of Bitcoin more in detail. It fell at 81k, below its 82k critical support level, before bouncing back at 83k today, by the time this video was recorded. I highlighted the 81k in orange. Let us analyze the liquidity now. Here, we've got a heat map showing price movements of Bitcoin over the past 3 days. Yesterday, we talked about those liquidity zones forming up in the 86k to 88 range. These zones represent areas where long positions were liquidated as the price failed to break higher, right? Now, we are starting to see a new zone shaping up around 81k. This kind of clustering usually tells us where traders are placing their orders, and it can act like a magnet for price in the short term, so definitely something to keep on the radar. The price of Bitcoin broke the previous support level that we identified at the 82k as mentioned in my previous video. Short positions were liquidated below 82k as buyers rallied briefly and pushed the price toward 83k before consolidating again near 81k. Bitcoin is currently consolidating near a critical support zone around 82k. If this level holds, we could see a recovery attempt toward 87k to 88k. However, continued selling pressure or a break below 82k may push prices down toward 80k. Given the current situation, volatility will likely persist. The high liquidation activity shown on the heat map suggests that traders are using excessive leverage, increasing the likelihood of sharp price swings in both directions. If we want to understand the narrative of the events, here's the timeline. At first, markets rallied in anticipation, likely due to expectations that the tariffs will be limited to a 10% baseline. But when Trump began listing reciprocal tariffs, including higher rates for specific countries, like China at 34%, EU at 20%, markets sold off sharply. We can guess that investors were caught off guard by the severity of the tariffs. After that, the sell-off continued as China and the EU announced retaliatory measures, adding to market uncertainty. Despite the sell-off, Trump stated that the market reaction was going very well, though this failed to stabilize investor sentiments. What this means for Bitcoin is that we are probably in for more short-term pressure, no doubt about that. But looking at the bigger picture, Bitcoin's decentralized nature and the fact that more and more institutions are getting involved could position it as a long-term winner. So, while things are shaky now, it's one to keep an eye on. Just make sure you're watching key support levels like 80k and keep tabs on how these trade tensions unfold over the next few weeks. So, to wrap it up, yes, the markets are shaky and macro uncertainty is hitting everything from stocks to crypto. But within that chaos, Bitcoin is holding its ground surprisingly well. We are seeing a lot of volatility, yes, but also signs of resilience, especially around key support levels. The next few days are going to be crucial. Keep an eye on that 82k support for Bitcoin and the 750 billion mark for the altcoin markets. If we see breaks below those, further downside is likely. But if these levels hold and recover, it could mark the start of a stronger bounce. As always, stay smart, manage your risk, and don't trade the headlines, trade the levels. And that's it for today's update, Crypto Sensors. Thank you for tuning in, and I will catch you in the next one. Bye bye.